We've got a pretty unique scenario at the moment because we have yields rising, but we also have metals continually grinding higher. It's 10:17 on the 11th of August. It's Tuesday morning, and I'll start off with gold here because, as I said, it is really a bit of a sort of odd lot of sort of price action that we've had last couple of days and that. But gold, obviously, everybody knows, been on absolute sort of rip through here. But it has really, let's just fill this out a little bit. For the best part, that's what we can use as a bit of a trend for now. We've got yields really recovered quite strong. So I'll flick across the yields quickly. This was that little high heel. I know it's a silly sort of name for it all, but it is, as you can see, a setup that does work. Typically at the bottom of a trend, and I guess coming down here we can see it. But that short shaft, like that drift up, short shaft, boom, boom, like a little stiletto-y heel part of it, and then bang, break through the highs, and this is what you get. You get a move up to the top side there. So that's what the call was on the weekend when we were sitting around this level over here after we sort of had that NFP sort of sharp shot down. And as you can see, yields are sort of pushing back up here. I think, look, yields are going to have to prove itself up into above sort of 4.72 or so, maybe 4.75, up into this area over here. And I think that may be the thing that sort of rattles gold a little bit, because typically in your normal scenario, normal sort of setup of price action and how things sort of will work together, yields rising is not an environment in which you'd expect metals to be pushing up. But as you can see, metals just keep on grinding higher. We had a little bit of sort of consolidation through yesterday, but it is still pushing up there. Have a quick look at the twos. The twos are sort of breaking a little bit out of this sort of channel that it had, sort of pulling back through here. But again, up over 4.27, clear out all these wicks over here. That's where I think we'll probably see the tens rising to that level. We'll see twos rising to that level, and I think, maybe I'm sort of wishful thinking. I don't know if it's wishful thinking, but it's maybe it's sort of stuck in the old ways of thinking that once we get to these levels here, that'll sort of rattle the gold market a little bit. But certainly you can't fault gold. I mean, it's less than a week and it's gone up about 10%, about around 4,000 to I think it's just tipped over 4,400 this morning. So around $400 in pretty much 4 sessions, because I think it started moving on Wednesday last week. But if we jump back onto gold, we can have a look at sort of what's happening. So yesterday I was sort of thinking, okay, look, this is a level, excuse me, that I wanted to sort of see it get underneath. Like we had that little sell down early in Asia. We had a little bit, let's go on the lower time frame, because you can see it almost actually worked pretty well with that falling resistance and that. So we had the sell down in Asia, bought back up second half of Asia, sold down in Europe, and then where are we at here? About 12 o'clock. So when the US got on board, it's just been and took off. And certainly once it went through those highs there, it had a nice little grind push up there. Look, I know it's sort of, jump on board, it's going up, it's going up. It's just, as I was saying yesterday, to me, the risk reward just was reduced around this point here. And obviously, I didn't take this trade here, but this has just been bull straight up through here. And I don't think there was any direct new catalyst that caused this. It was mainly just sort of like structural, US got on board and they wanted to buy it, and it's just sort of straight up. So this kind of movement here, like at least sort of this kind of move is profit up down, profit up down, profit up down. This looks more just sort of like squeeze-ish. And I think there's a lot of people, because we are in that sort of high time frame sell zone. This is an area in which we've seen the market sort of sell it previously. They've obviously thought about it here through Asia and through Europe. But of course, that third push has just taken you through to the top side there. So realistically, now we're sort of looking at 425 to 472 for the next kind of sort of levels that I'd be sort of interested in seeing what happens through here. And whoops, I don't know why that didn't continue on there. It must be this one, I think, lock. They're the sort of next little top levels that I'd sort of be looking for through here to sort of see what the market decides to do with it. But if we actually unpack the actual push that it's had so far, so we had obviously, where was it? NFP was on the Friday, but even that initial push, 23%, very strong. There's barely a retracement there. This was the one I was waiting down here. took off without me. Coming up over here, I was like, okay, look, get down to these levels over here. This is kind of the trade that I wanted to sort of try and capture. I wanted to move back down towards this sort of like 40s area to then try and capture a move up here. But as you can see, this is not really normal kind of price action. This is really just pushing through here. And this is reminiscent of what we saw in 2025 when, all the central banks are buying. And this is the thing that are trying to sort of unpack at the moment, because in an environment where yields are going up, the dollar's actually sort of, it's coming off its lows. It's not really sort of like massively prospering. But as we can see, sort of yields are going up, but gold keeps pushing up. And these shallow pullbacks are kind of, what I mean? Central banks buy under different conditions than normal market. So normal market go, okay, yields are going up. Well, that's not the option for us there. So we'll go and we'll buy something else. Or we'll sell gold or whatever. These guys are just sort of going, hey, look, they don't need to wait down here. They're just they're just endless buying machines. Hence what we saw in 2025. And you're seeing these pullbacks, they're not even getting to the 23%. They're not even really there's no profit taking here. Maybe this is the market participation of profit. But then as soon as the people turn on the switches to start buying, poof, it just goes straight up again, these kind of moves like this. So it's interesting to sort of see how high this thing will go. As I said, maybe I'm going to miss it again, but I'm still a little bit cautious just on these kind of moves. Let's see what happens when it comes back up into this area over here. We do have CPI coming, and I think that's really going to be the make or break for it all. So with CPI coming, if we get a hotter print, that could be something that triggers a couple of sort of two-pronged effect on it all. Obviously, it'd spike yields a little bit more. That might be enough to sort of shake the metals. It could sort of trigger a bit of a sell-off in equities. If we do see a sell-off in equities, it could also maybe trigger some margins, and then sort of people have to cover the margins. Where do they get it from? They get it from, quick sells, quick profits from gold, these kind of things. But certainly at the moment, as you can see, even just now where we are, it's only 10.25, and it's just opened up and just goes bang straight up. It doesn't really, it's kind of ignoring any sort of technicals with it all. As I said, with these negative divergence, generally we're getting that third push here. So 1 drive, 2 drives, 3 drives. We'll see how this goes. I mean, it's kind of silly to sort of think, okay, yeah, we'll get, I wouldn't be shorting into this exact move here. But certainly, should we get these moves, should we see some sort of indication of this being some sort of I don't know whose stops you're hitting up over here. All the stops I would have thought would have been in this sell zone over here. But should they sort of see some sort of fast retracement, that's the kind of indicator that we'd be looking for to sort of say, okay, maybe we've hit a bit of a high here, and we can start to look for a sort of bit of a pullback. But certainly at the moment, this thing, I mean, look at these. This is what I'm talking about with these moves here as well. Look, there's just no bottom wicks. It's just candle up, candle up, candle up. And this is, as I said, reminiscent of kind of what we saw in 2025, which was central bank buying. And as we know, that can just carry on. It doesn't really matter. It took a while for me, and it took a lot of money as well, unfortunately, to sort of to get on board with that last year, to realize that there's a certain point where technicals just don't matter. And when people are just buying because they're buying under different conditions, well, that's when you'll say, oh, yeah, here's my pullback. And this is exactly what I've been saying the last couple of sessions. I'm going to wait here for a pullback and a retest, and then I'm going to jump on board. Yesterday, I'll wait for it to get down here, buy this, come up. You just don't get the option because these guys are just buying it continuously and pushing up and up and up. So unless we sort of see some sort of really fast, like capitulation up, capitulation down kind of thing, big wick up, we hit a bunch of stops, and then we start to sort of see some reversal, this thing, there's no real sort of limit as to sort of where this could be heading to at the moment. Just on this gold as well, we may as well have a look at the gold-silver ratio. And gold-silver ratio is pushing down for its third push into, again, I guess this is actually breaking a little bit low. It is still technically negative divergent. It is showing signs of a little bit of a wedge down here. If we link these together. But again, till this thing actually proves itself and gets back up over here, we're not really seeing anything. Where was this? Was that last push up here? about 1.27 of that last push. We got a little bit of a push back last night, but as you can see, it doesn't really matter. It just keeps on coming. This, I have to admit, is one thing that I misread the other day, because it was actually sort of this move here around that sort of Thursday, Friday, because I didn't look at enough on this to see this move here, which was really just a back test of a daily. We did get that big push back up alongside all those other sort of yields and all that kind of stuff. But as you can see, they're still pushing this thing down. And as we know, as this comes down, that's up for metals. So look, it's pretty oversold. Is into a bit of a sort of wedge. Is negative divergence still, even though this low is actually lower than this low. We've still got 3 lows here, and they're still not coming back to the oversold yet. So again, it just makes me a little bit, maybe I'll miss the boat again on this one, and this thing will just go up another $50, who knows, with gold. But to me, it's kind of like, there is an argument for it. However, till you get back up above here, above this sort of, realistically probably above 67.80, and outside this falling resistance, this could just really just keep on dribbling down, even with any sort of push up a little bit. But it's a bit of a sort of a interesting sort of situation at the moment. And I think, sort of, as I said, CPI is going to be the big sort of driver for it all. But, I mean, if that is, it's like the same with NFP. NFP was supposedly tipped to be increase. And obviously, as we know, it came in at very shocking numbers. And gold was being bought up, silver was being bought up relentlessly prior to it all. It's just something to keep in mind. Another sort of thing that's a little bit odd as well is we had oil rip yesterday, about 5% or so. And this is the gold oil ratio. So, pushing back down over here, okay, oil definitely outperformed gold, but both moving up here at the moment. We're seeing this sort of curl back up here a little bit at the moment as well. So this is an area in which I'd be sort of interested. I think if you really see this thing push back up over here, then we're probably going to be seeing, as I said, another leg up in gold, because they just seem to be buying this thing relentlessly. Have a quick look at oil. Oil's, as it says, broke out of that little sort of kind of triangle falling wedge pullback that it had been sort of working on. This is the level in which Besant came out. Was it Besant? Yeah, whoever it was, came out and had those garbage headlines last week. So let's put a little line in through here. That's where he was like, oh, look, you know what? We're going to have a deal in 2 minutes or 5 minutes or 2 hours or whatever the crap was. It was bullshit. But the market still reacted, didn't it? It still sort of went, hey, you know what? Let's drop $10 or 10% or thereabouts the same. Anyway, look, this has just really recovered. I did say this last week, I think on the other oil chart maybe, unless I've just deleted that thing. No, this is the oil chart we were using. And I was saying, look, this thing will recover. But I did say last week it's not going to recover like a zoop up like this. But as you can see, market sort of goes, oh, really, really, really? And then yesterday / weekend, we had a bit more sort of, a little bit more sort of chatter from Iran. And with Iran sort of actually sort of coming out and saying some headlines like, oh, you know, we're not going to, I can't paraphrase here, but we're not going to sort of, we're not going to yield basically, and we're just going to ride this out to the end of Trump's term, which is still 2 years away. So, you know, what's the implication that they're just going to sort of just keep this thing dragging on for years and years and years? I mean, the Ukraine war was supposed to be a couple of months. I think that's 4 or 5 years or something now. So, look, these things can obviously drag on. And I think sort of with that, the market just sort of said, hold on, wait. I thought we were pricing an imminent deal in a few hours or next day. And then I told you last week, as I was saying through here, these periods, this is the market sort of going, I don't know if I believe it. I don't know if I believe it. And now we've got a bit more of a confirmation of them going like, oh, it was bullshit. So what do? You unprice that whole drop because that was all garbage. The market dropped on that, realized it was garbage. Okay, now we're back up to where it was. And the thing is as well with these sort of things, it's like with all charts, like you could say, oh, you know, when it was at 82, we were coming down like this. And you're like, oh, geez, 82, it's come up a little bit, but 82, look, it's a lot worse than it was at 85. 82 and 82 now are not the same thing. 82 then, we were coming down. 82 now, we're moving back up. So, you know, it's not, even though it is technically the same price, there is a lot more upside potential the fact that we've gone down lower and come back up to this point. So we're moving in this upward trajectory now. We do have a bit of a sort of a breakout here. Things are going to get spicy if it gets above 86, in my opinion. Above 86 and that. Now, that's where Trump pulled back on having the greatest bombs dropped since World War II or whatever. It's almost like a joke, isn't it? Well, actually, it is a joke, but, anyway, that is what he was saying, and it was on that Friday. We had a nice little push into close. You see on a lower time frame here. Maybe it was this one here. I don't know. It was around this point over here. And we had a nice push into close at around 86. And then, just to make sure I've got the right chart on yet. And then, of course, we got a big drop down that, recovered a bit. Besson said the deal's imminent. Blah, 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 blah. So, maybe if they do attack, maybe we'll undo this part. But certainly at the moment, we've realised that that's garbage. It's undone this little bit here. But how this is relevant to sort of everything else is that sort of, it's not typical that we'll be seeing yields rise, oil rise, gold rise, and dollar is not really rising, but it is recovering a little bit. So yesterday, through most of yesterday, it was doing not too bad. Yeah, I mean, slowly grinding back up over here. But certainly, it's not at this point here. This is where it needs to get. So, and I think that's the key sort of factor at the moment. Like, although we got sort of dollar sort of recouping a little bit through here, it's still sideways. You know what I mean? We could say, okay, yes, look, more or less it is sideways now. We were coming down. This is all sort of, I've covered this 100 times, FOMC, BOJ, then sideways, sort of working through that, the Trump saying that they're not going to drop the bombs. We got NFP. So there's a bunch of things that have just sent it sideways, but it's still at the risk of being consolidation to break lower. And it's on a major support area at the moment as well, this sort of rising trend. So as I said, if it gets back above these levels over here, I think that's where we're going to see things kick back into gear a little bit more, as they should be. But the thing is, while this is still potential to break lower, people are positioning, the market are positioning a little bit more with metals. And that's why, even though it was a bit of an odd day yesterday, I'll give you that, because if we have a look at the actual intraday kind of movement, obviously it is still up and down, but it is moving in an upward sort of direction. But I think what the market is thinking is like, well, that's all very well that it's coming up, but really it's just in a range. Until it can prove itself to be holding this crucial rising support, this is a very big possibility. And if we see the dollar break lower here, those flows are going to go into metals. And what we're seeing is a pre-positioning of that kind of thing. We're seeing the market basically pricing probably a dovish print and or dovish response from Warsh. And they're sort of thinking, hey, look, I'm not going to wait till the print to sort of get into the gold. I'm going to pack in now. The risk with that is that obviously the CPI comes out hot. And if the CPI comes out hot, we're going to see the market price a bit more of a hawkish response. And that's where we're going to see a bit of a recovery in the dollar. And I would say that's the time that we see the yield spike, as I said at the start. And let's get rid of this and this. That's where we see the yield spike. And I think that's what brings gold and silver off a little bit. I think the move has sort of moved enough now to sort of justify the break. I don't think it's sort of like necessarily we're going to get it, unless we get some like catastrophe and it really hammers back down into like sort of, sub 4100. That's where we might sort of see some panic stations and, gold could be going a lot lower if we get to that level. But I don't think that's not really the base case scenario at the moment. But certainly I think it kind of explains the price action we're seeing at the moment, is this, that the dollar may sort of get these little dribbles up, but it's got a lot of things working against it. I think the intervention stuff's kind of out of the way. In terms of sort of the dollar being a bit stronger in regards to the sort of Middle East situation, I don't think the market really cares. I mean, look at equities. Equities keep pumping to the highs. Well, I say pumping to the highs. It did have a big pump to the high up here. It hasn't really recovered a great deal. It doesn't really support the idea there. Maybe ES a little bit more up near the highs over here. But should we see, again, it all works together, but should we see, I was on the dollar, wasn't I? Should we see that particular scenario in which it's a hot print on the CPI, demands a bit more of a hawkish response, yields go up, borrowing costs go up. Equities are not going to like that. Equities might get a little bit of a shake. In that scenario, you might see some margin calls. You might see people thinking, hey, look, where can I get some profit from? What can I sell to cover this position? And that's when you might see some sort of like drags out of gold. But again, it's a lot of if, and this and that kind of thing. So it is a specific scenario in which it needs to happen. It's predicated on a hot print. Again, if we get that sort of weak print on CPI, that's pretty much what's going to happen with the dollar, and it's just going to be on you go with gold. So it's a very interesting sort of time, and it's particularly after that NFP print on Friday. It's really sort of shaking the market a little bit because, it's all very well when it's only inflation we need to worry about. But that was a weak print. And I've heard sort of people a little bit sort of like more in touch with these things than I am, sort of unpacking the different levels of the different types of employment that were added and, or in this case, lost jobs and this kind of stuff. And they said, well, actually, it's not as bad as they think, and blah, blah, blah. That's a little bit beyond me. I don't have access to those kind of numbers. And I don't sort of be able to read into it so much. But, as I said, it's a lot easier when you've only got one of the mandates to deal with, to sort of price the market around. But when we have jobs bad, we know what happens to the dollar. When inflation's bad, we know what happens to the dollar. And so now we need to fill in those pieces of the puzzle and that. And if we find that inflation isn't bad, but jobs are looking worse, we look at what's happened previously in those kind of scenarios, which is all this kind of stuff back over here, weak dollar. So look, it is going to be quite a sort of vital point, I think, for the dollar through this period. And I think this is going to be a little bit of a sort of medium-term make or break for the dollar. Downside, look, you got little bits of support through here, but I don't know if that's necessarily going to be the thing that holds. I think if you break this, you might get a bounce, but I think you're looking back at these 97s and that. So, look, again, it's not necessarily my base case. I do think the dollar will somehow resolve itself to the top side. I think yields keep pushing up and that. I think that will sort of kick into gear. I don't see that necessarily doing a 180. But, as they always sort of say from the central banks and that sort of, they're data dependent. So if you get that data and you get that particular scenario, that's just how we probably expect the market to react. Have a quick look at silver, because silver keeps powering on as well. We're coming up into the next sort of sell zone here. This has been an incredible recovery, I have to admit, though. At one stage, I thought we were coming down under sub 50. We did come back pretty much and test that big breakout point. That's like sort of long term, going way back to these kind of levels over here. Actually, prior ones as well. But as you can see, sort of it really just turned around, looked like it was going to go, and it's just jammed straight up. To me, it's just too steep. Like, I mean, even look at these sell downs here where they're super steep. What happens to it? When it does come up, it comes back up. Yes, it grinds back up, but same sort of thing here. Sharp sell down and then an extra leg down. What happens? Sharp move back. And this is what I sort of do think with the metals is a possibility. And this is what I was saying. I don't think, call this equivalent to 4,100 in gold. I don't think necessarily the price action, as I said, unless you get some sort of like drastic moment, I don't think it really calls for this. But I do think that potentially it could call for this. And we could get quite a steep sort of pullback in these things. As we sort of saw with this sort of sell down period through here. I mean, just for point of reference of this move down, 61%. What a surprise. 61% we know is that big sort of strong retracement level with it all. So, you know, although things when they're sort of going super fast down, this one we knew, this was at 23%. This is what happens when it can't bounce. 23%, look what happens to it. So we know that these retracement levels are very important. We do have 1, 2, 3 sort of drives to the top side here till it gets underneath this, till it gets underneath this sort of rising support through here, which is getting tighter and tighter. I still think, you know, it's obviously still sort of worth looking for upside moves here. But, you know, again, these things don't, as much as these things are all just charging long and doing all this kind of move, if the macro environment changes, that is when we're going to have to, you know, trade accordingly, of course. But, you know, it's just something to sort of be aware of if that happens. If we get that cool print, well, there's no reason why these things can't realistically just keep moving on. Like this buying is just unrelenting, but we'll see how we go in that. Because of course, you know, the selling was unrelenting along here, and look at the recovery. So, you know, there will be a point where people will take profit. No, it will happen, and that'll give you a pullback. As to sort of where it comes to, that's the next piece of the puzzle after that pullback that we can sort of use to sort of plug into it all. All right, so that's about it. In terms of data and that, I think we've got the RBA today, don't we? Yep, so looking to sort of hold tight there. That's pretty much expected with the RBA. I don't think anybody was expecting him to hike this time. But we'll sort of listen to the press conference, see what they've got to say about that afterwards. Apart from that, it's pretty quiet sort of through here. Nothing much overnight. CPI, as I said, is the big one tomorrow. We are looking for a little bit of a mixed bag of it all, I think. Yeah, so a slight tick up on month-on-month and core month-on-month tick up as well. The headlines for core for the yearly and the core are a little tick down. Now, this will be an interesting one because just before we fly on, this is where oil was at last CPI reporting period. And so now we've got this obviously being August, we're going to be looking at CPI through July, well, sort of period through July, which is this period. It'll be interesting to see what happens with CPI in relation to oil prices. Because, you know, CPI came down quite drastically last time, but of course, if oil was the one to look at, well, this is what oil was doing through that CPI print. This is the next CPI print. And, you know, oil went up, well, a fairly big jump, wasn't it? You know, oil through that period peaked around 40% and closed the month around the better part of 30%. So it'd be very interesting to see how the market sort of, or how that CPI print relates with this kind of stuff. And maybe there could be a bit of a shock for the market, but we'll have to see. I'll cover that tomorrow a little bit more just before we get into the print. All right, that's it from me.